Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar index still relatively quiet. You can see not a whole lot of movement we're seeing here. We are seeing in the pre-market hours, we're seeing a little bit of a jump up here in equities. You can see Microsoft right up here at this resistance. And correspondingly, we're seeing the NQ jump up rather well. Let's see here. Amazon up here to 3077. NVIDIA up here to 520. Quite the change from where we were just yesterday. Bear with me. So we're going to take a look at what we stand with equities, or we'll move into the Nasdaq. And you can see we've already had a pretty quick jump up here in the Nasdaq with that pre-market jump up here in the equities. So you can see here we've made jump coming up right here. And this is actually key level. They haven't quite got there, but they're just about. Bear with me. Right there, 11,768. We're just about there. We'll take a look at the S&Ps. Good move here in the S&Ps, but they responded much better than the NQ. Responding very well up here. We'll take a look to see what's on tap today. Well, we do get Italian, or actually Mexican industrial orders. Now that's going to be in another 2 hours. And then that's going to be it for the most part. We get a consumer survey. Now that's under Canadian data. That's going to be 11 a.m. Eastern, which is pretty weird. That's kind of strange. Also, Mexican survey data. And then U.S., same thing. That one's going to be at 11 a.m. Eastern. But that's going to be it. So if you look at it as we come into the States, we have nothing. So it's going to be interesting to see how they react with no data. And I just make sure, I said someone had mentioned no sound. Do we have sound here? Because I've got sound for myself. Do you have a check on the sound? Someone was saying about no sound. Okay, good. Susan said it's good. Yes, good here. Okay, I just want to make sure. Okay, great. Working now. So bear with me. So let me just go in and touch on the news stories real quick. And also, once again, like I said, a decent little rebound off of these lows coming up in here. Well, actually, if you look into the NQ right here, this is resistance here, this 11,751. This number stretches up to right there, 768. But it did run to the 751. We're kind of pulling back just a hair. And I was just checking something else. I'll jump into that screen real quick. You can see here we had a little bit of volume go off once they hit that level up in here just a moment ago. Actually, when they got to this just around the 751, we We hit a little bit of decent volume. You can see the market kind of pulling back. So some stops went off, and then we just edged back a bit. And you can see the S&P here on the 30-minute. Same thing. We made it right up in here in this area here. And let's go right in here, 35.65. And the market just paring back a little bit from that area. This is just the euro and the cable, but that on the future side. But on a very short-term basis of 5 minute, let me see if let's stand right here on the 30-minute on both those. With that being said, let's go on and bring up the news. Precious gold inches up on the muted dollar because we had fairly quiet day yesterday and actually having another one today. In these in FX, gold edged up on Wednesday, buoyed by a softer dollar as investors weighed the logistical challenges surrounding the mass rollout of a potential COVID vaccine. Coronavirus cases continue to rise in U.S. and Europe and will require the monetary and fiscal measures. In that sense, the overall backdrop for gold has not turned negative, said Harshal Barrett. But since the risk sentiment has improved, we are going to see certain liquidations coming in. Federal Reserve policymakers said on Tuesday that the surging coronavirus cases threaten the U.S. economic growth, and once more in coming months, and that the targeted aid was needed. As people become more and more aware of the decisions and details of the vaccine, equities really could wane. Which is a bit of a surprise. I mean, we've already pulled back down already anyway. Not that we can't further, but other than obviously to me, the main thing is going to be this whole thing with the transition of power, which is more of a weight, and also the lack of a stimulus is going to weigh more than I think they're talking about the details of it. That doesn't make much sense. Dollar studies as vaccine optimism wanes. The dollar stabilized as optimism boosts about the potential coronavirus vaccine was offset by worries about how the drug will be delivered by a surge of new infections. New Zealand dollar recovered from an early dip to its strongest in a year, and half as traders scaled back the bets the central bank would move to negative rates. The initial optimism about a coronavirus pushed the dollar down against riskier assets. With the global daily infections accelerating yesterday, it seems that the concerns of the pandemic's economic impact may have limited further gains in equities and other linked assets. The year was last traded at 1809. Sentiment for the dollar got a boost after Pfizer said on Monday the experimental coronavirus vaccine was 90% effective, and the RBNZ kept rates on hold at a quarter basis point and introduced a new monetary policy tool to encourage more loans by reducing costs for banks, which matched the market expectations. RBNZ Governor Adrian Orr said domestic economic activity since August has been more resilient than previously assumed, which many traders took as a sign that the chance of going negative interest rates had receded. As a risk-linked currency, the Kiwi may continue to gain against the dollar if the financial community stays on a risk-on mode and due to the lowering of the negative rate chance. Now, not really a whole lot of news. With that, we're just going to move into the analysis, and bear with me. I'm going to try something a little new here. You can see Tesla over here, same thing, a little bit of a jump in here also, but let's go on and I'm Well, this may not work bad either. I've got everything else on another page, but it makes it easier to see it. I guess we can leave it like this, I guess. We'll try it and see if it works out better than the other way. If not, we can spread open the whole thing. Or we can leave this open there like that. Doesn't really make a whole lot of difference. Oh, we can see the Nasdaq did pull away from that 1751 area here. We already dipped down to 1760. Remember, we noted that volume kind of went off right here, and then you've seen it decline since then. Okay, let's go move into the here on the euro. So the euro pairs back despite the bearish candle on Monday, but was limited on the buy, limited to the bias chart support at 1779. So yesterday we had 1779. That was the low for the day. Resistance on Wednesday will be 1858 with support at 1757. This might work better out, actually. Let's see. And 1858. Let's go move on to the cable. This thing has been something else. So the cable saw a solid close on Tuesday above key level 3248. Resistance on Wednesday will be 3299 with support at 3201. So it's going to be 3299. It comes in literally right at 3299 and coming across this wick here, and that's what I use there. So 3299 with support at 3201. And on to the Aussie dollar. So the Aussie traded in a restrained range on Tuesday, closing at the same area of 3 of the last 4 sessions. So you can see here, look, 1, 2, 3, 4. Look at these closes right there, all within basically the same area right here in 3 of the 4. We've pushed up a little bit higher, but resistance on Wednesday will remain 73.30 with support at 72.20. So no change, except that the support, we did lower that. And on to the Kiwi, we had the big announcement, RBNZ. Wow, another high, another day, another high. Unbelievable. So the Kiwi closed at yet another new daily high. Resistance remains 68.96, and we just took out 69. We're pulling back a little bit. So resistance remains 68.96 with support at 67.69. So 67.69. But you can see we're right at resistance. We did take out 69, but we've come in a bit. We're actually 69.91. So this is resistance. We have to pull it much further back. If you and you can see right, we're coming up right there. You see these touches? I'm just going against this body touch, and that's from coming up with 68.96. That body close. Let's go on and move into the dollar CAD. So just want to go and show where I'm coming up with that 68.96, just not pulling it out of the hat. And that's on a weekly close, that 68.96. So that's a weekly close. Let's go to the daily. Maybe we should put a little asterisk there. Let's do that. Like that. And here with the dollar CAD. So the dollar CAD traded in a narrow range on Tuesday. Support and resistance remained the same. Support is going to be 29.62 with resistance at 30.63. So really, we saw no changes. So I mean, we stayed in such a tight range yesterday, and the same thing here today. No changes whatsoever. And the same thing was also the case for the dollar peso. And the only difference was you can see here we have 2023 for our support and 2046 for our high. And we stayed in a very tight range. And you can see here so far the high today has been 2036. The high yesterday was 2048, and we had 2046. And 2023 is very, very key support. So we're just almost there, one digit away, but that's what support 2023. It's key support too. Let's go into the dollar yen. The dollar yen eased back on Tuesday, finding support at the bias chart support level of 487. I think the low was just a hair bit lower, but not very much. I guess right here. I guess we did. We had 47. We got down to, I guess, about 479. So just it wasn't bad. I mean, considering where we closed, so we missed the low by just a few pips. Resistance on Wednesday will be 564 with support at 501. And you can see the low today's been 105, so not bad there. Not bad at all. And it still remains bearish for now. Let's go into the cash dollar index, and there's been no change here on the cash dollar index either. And once again, these FX markets aren't moving too much. At least the majors. Look at that. See no movement. Almost identical. Look at that. Almost identical to the prior bar. So no changes. Support's going to be 92.07, resistance 93.07, but we're just not moving anywhere. With that, we'll move into the cross rates. Well, we'll continue to run here. That's not a surprise because remember how well the Kiwi's doing. So we'd actually had our resistance here at 72.33, but we've even added on to that. So let's go and move on to a weekly chart, see if we can see something a little bit closer. See this body touch right there at close, which is that body close which is also essentially the high on that 1 week, is 72.78. And we're just about got there, so that's going to be resistance. And support, we can see the 71.40, but we'll go with this high, that wick right there for support, which is going to be 71.98. And let's go and move into the euro yen. Euro pound. Look at that. That's on a weekly. And look, that is really holding up pretty key. That 80.76, which I think we're just a hair below that. We'll look at the low here and the high. This high wick, and this on a weekly, is 88.64. So let's go with 88.64. And this is on a weekly chart. Resistance is going to be this wick right there. That's going to be 88.98. That's probably a little bit too low. We'll go with the body close right there, which is going to be almost seems too high realistically from where we're at, but and right there, that body close, that makes more sense. That's 89.22. And I think we can now say that's bearish. And on to the euro wad. This one continues to fall back, but we are into some key support here. So we're just going to go with the level, which that level is 61.48. And resistance is going to be right here. These touches coming right across here. See that? Which is 62.03. And into the Euro Kiwi. Boy, this thing's come unglued. And looking at a weekly chart, we have broken through this 71.50 support. We've got this body close and actually this wick here. And that comes in at 70.82. And resistance. Switch back to the daily chart. For right now, that's going to be resistance. And that's going to be 71.67. But realizing against these Kiwi pairs, they're at weekly levels, whether it's resistance or support. So be careful here. We're pretty well stretched. Go to the Aussie yen. And we're going to just stick with the level. You see there, 77.10, 77.10 here. Support 70.16. We did, you can see here, we held that level 76.47. Right there. You see that body open right there, 76.23. So we'll just open it, pull this up just a little bit higher. That's if they break lower. Doesn't seem likely at this point. Not that it couldn't take place tomorrow, maybe, but for right now, everything's looking pretty good. Move on to the guppy. We're still blasting ahead here with the weakness we've seen from the yen. Resistance is going to be, you see right here, you've got this close here, you got this close, you got this wick and this wick. So you see, you got a little bit, nice little zone right in here, right there. So the lower part is going to be 40.46. We'll go with that. Been a heck of a move. And support. All these little touches coming across. It should be 39.51. There's some support right there, but that might be a little bit too close. But 39.72, we'll go with the 39.51. And lastly, with the sterling odd. We've seen a nice bounce back. You can see the body coming in right there, and you can see all these coming in. So you got a good little bit of a resistance coming in here. You can kind of split the difference here. This body is here, and here's this one here. Kind of split the middle right there, and that gives you right there, which actually right there at that body too. You see that? So just right here at 87.27. I was meant to say 82.27. And support right here, this lower wick right there. And you can see that confluences with this wick also. So it's going to be 81.69. And there's the bias chart for today. We can take a quick run back here with the euro dollar. Dipping back, but still relatively steady, just under 118. And take a look at Netflix. Working actually a little bit lower. Some of these are come off just a little bit from those initial jumps. We'll take a look. You can see here, we did jump up. We're just kind of quiet after the jump. See that quick jump, and then we've kind of paired back just a bit. Facebook up here, 274. Amazon, nice little jump after that heavy weakness we saw yesterday. And if we switch back, you can see we made that quick run and we dipped back. So we made it up to 11,751. We showed where that volume had jumped up, and then look from there, we just started working lower. And we've actually stayed lower. We have actually here on the 30-minute, 11,768, but you can see on the 5-minute, we had that level, and it came right to that level. You see that? 11,751. We took it out by just a hair, a little bit. I think it looks like we made it up to right at 760 or 759. And then you can see how much we pulled off, 50 handles from there. But we did see the volume go off at that point, which gave us an idea that we may have just gunned some stops. You can see that right here. See how the volume goes off right here? Right there. It doesn't sound like a whole lot, but in overnight trading, this was a decent little pop here at nearly 900 contracts. And look, we took out the stops right there at 751. We had that level already there, and you can see how we paired back. So we'll see how today goes, but this will be the first key level for them to try and get above. And with that, we'll call it a day. We'll see you in the chat room. We'll get the bias chart posted. And thanks for joining us here on the European Crossover webinar.